On this exciting episode of Amazing Entrepreneurs, we get to chat with Frank Tomosula from Lendio, and he's going to be giving us the basics of business lending. Hello, hello. Welcome again to another episode of Amazing Entrepreneurs. Today I'm super excited to be speaking with my buddy Frank from Lendio. So Frank, tell us everything about yourself, and a little bit about Lendio.
Sure. Frank Tomosula, account executive here at Lendio, leading marketplace for small businesses to secure loans. Been with the company going on 4 years now.
Nice. So Lendio is almost like a mega corp. It's got very good ratings, though, in regards to the agency. But, you guys do work with businesses primarily.
Yep,
is that
small
correct?
business owners.
Okay, great.
Yeah.
And so this episode, and I brought Frank in because I actually worked with him for my own business, right, for Amazing Tech. And
Yeah.
he was instrumental in helping me along the way. All businesses need some form of a capital line of credit, and honestly, I didn't. The whole way I got, because we bootstrapped. We were circa 2018. We bootstrapped for many years. And then we came many years, but total of max 5.5, right?
Which seems like an eternity.
Oh
at
my
times,
gosh! I mean, you should see me. I was, I was a young buck. I had hair, right? And now it's, I was totally black, in the beard. Now it's salt and pepper, and I'm not sure if the toddlers or the business or a combination of the two, but it's, I'm a little bit more weathered now.
It's wisdom. It's wisdom.
That's right. And I actually didn't even consider like funding or finding any sort of credit or anything like that until a buddy of mine told me he went through Lendio. And
okay.
And so I wanted to, the title of the show is Amazing Entrepreneurs, but I think that this is such an important topic on like getting a business up and running and started. So I wanted to bring the expert on. So
I appreciate it.
Thanks for jumping on with me.
Yeah.
And so Frank, let's just start from the top, right?
Sure.
Tell me, if you're a business owner, what are routes you can go for raising capital?
There's a lot of different ways that people approach it. Money from mom and dad.
Okay.
Taking money out of their 401k.
Right.
Savings. Then you could start getting into venture capital.
Okay.
You could get into having other business partners and associates getting involved, but obviously they're going to have a say in how the business is conducted and run.
Yeah.
Like
an angel investor.
Yeah, and I think it also depends on your business, your size, your vision, what you're looking to do.
Right.
Everybody has a different, I guess, scope of what they're looking to accomplish.
Right.
If you're a small business and want to stay a small business, obviously some of those routes aren't going to be, appeasing as a business owner or applicable.
Right. Funny enough, speaking of VC, because you say, hey, some of it should, electrician. Wouldn't think that it would be, you would think it's very much, there's thousands of different successful small electrician businesses, right? Mm-hmm. And you see them all over the place. Mm-hmm. Had a buddy of mine come in, episode's not out yet, but it's Razorback Electric. And if you're anywhere in Palm Beach County, you can't help but see their truck. I mean, they've got 130 employees and like 70 vans. And he was telling me on the episode, and the reason why I bring it up is I wouldn't think that's VC, but once you get to a certain size, they're like, you have different, private equity, VC, whatever, right?
Yeah,
and they
more attractive.
Yeah, and they're like, you know what, we desire this line of business, right? Because they invest more into mature, established businesses, and then they're trying to get into different sectors, and they wanted specifically, because he has like commercial, residential, they wanted a specific one to pursue, and even might not start out that way,
right?
But maybe you grow into it,
for sure.
But so speaking of, so there's you can do like the angels, you can do a partner, you can bootstrap it, you can do VC, or You can contact, so tell us a little bit about specific ways that, Lendio, that you are able to work with small businesses to get some sort of capital.
Yeah, for sure. So Lendio is essentially a marketplace.
Okay.
Right. We have over 75 different banks that we work with.
Really?
Yeah.
Really? Okay.
Yeah.
I know the couple, so,
So it's a pretty large portfolio.
Okay.
Everybody's going to have different qualifications and
Okay.
different needs
Okay.
at the end of the day to fuel their business.
Right.
So, by having a lot of variety and having that conversation with that business owner and learning exactly what they need, we match them with the appropriate lenders and, get them the funding that they need to do that.
Nice. And how does, and by the way, all this is like entertainment purposes only. Nobody's giving financial advice here. We're just talking about different ways in which we have seen other people do it,
For sure.
So, just like to throw that disclaimer out there, but, typically speaking, in order to start going down the path of that, like, what does that look like? What do you need?
As a business owner?
Yes.
I think the basic fundamentals consist of opening up a business checking account.
Right. Right.
There's a lot of businesses that have a EIN number, but believe it or not, they're still running out of their personal checking account.
Wild.
Well, it is. It's just maybe due to unknowing that you need to have that, maybe a little bit of laziness, a combination of the both, or maybe they don't feel like they're big enough to establish
Right.
a business checking account. But that
Right.
number one, you have to get a business checking account and an EIN number.
Right.
Right. A lot of people operate as sole proprietors.
Is that through a social?
Yeah.
Okay.
Yeah, through your social.
Gotcha.
The next step is, obviously registering with the Secretary of State, that where you're operating your business. And I think it's important that business owners make sure that they're depositing all the revenue that they generate from that business into that account.
Gotcha.
There's a lot of businesses that are cash businesses, and they think they're doing themselves a favor by maybe stuffing some under the mattress, which is fine,
Right.
until it comes to the point of underwriting and looking at financials and revenue and things of that nature.
Right.
So setting up an EIN, getting the business checking account, those are kind of the basic fundamentals, I would say, to get the ball rolling. And then I think the third thing that a business owner should be conscious of is always monitoring their credit score.
Okay. Now, credit score as to
Personal credit score.
Okay.
Yeah, personal credit score. I think people automatically assume by having a business and having a EIN number that they should just automatically qualify for a business loan.
Right.
It's important variables in order to obtain that.
Okay.
But another important variable is to always make sure that you're monitoring your credit and trying to keep that as strong as possible.
Okay. And and I brought it up. There's also the DM. How much? Does
Dun & Bradstreet.
Dun & Bradstreet.
Yeah.
Is there any others, or is that the primary one?
Experian Business Credit.
Okay.
Yeah, getting a DUNS number.
Okay. And do I see the Experian one? Do I need to do anything, or they just pick it up on their own?
It depends. I think it depends on the products that the business is using. If you have certain vendors, they may automatically report to them. Sometimes you have to do self-reporting.
Interesting. Love that.
Yeah. That's always fun.
I see, knowing what I know now, which is not a lot, not a lot, which is half the reason why I started this podcast is because and I say it almost every episode, but it's, this is to me working on the business, not in the business. So as an IT guy, instead of doing like IT stuff, I've got to do stuff that is outside of my natural scope, right? And so some of these things I wish I would have learned a little bit earlier.
For sure.
And because not that I wouldn't eventually stumble into it for, whatever rhyme or reason, but maybe I could save myself some time and some pain or, a lot of times money. I see a lot of people that are like, I want to own my own business, right? And so my best episode 2, Adam from Ready.io, he's talking about Well, then what's the easiest way to start your business? Start a consulting business, right? And so a consulting business a lot of times starts from, hey, I'm doing some side work for somebody. So in my aspect, I'm doing some IT side work, right? And I start, but the most important thing is that I establish myself in whatever state, right? And so, contact, either go through a legal Zoom, talk to an attorney. Like
For
I just
sure.
had I just had Francois Blanco on. He basically he's an attorney that specializes in that. But a lot of times, you can get away with just starting an LLC,
Yeah.
then getting an EIN number,
Right.
then registering with DMB,
Right.
and then doing a business bank account, and then just do your consulting work for about a year or two.
And you know what? You bring up a great point, because now that I'm thinking and the wheels are turning, if you eventually find yourself working for an organization or a company,
Right.
and you have this passion and this dream to start your own business, right? I think another important thing is realizing that time in business is also a very important factor when banks and lenders are looking to underwrite a file.
Interesting.
So take that initiative,
Right.
start the EIN,
Right.
register the business.
Right.
Even if it's a small side hustle, 5K, 10K, whatever the number is, right?
Right.
But that cumulatively, that time in business is going to be one of the variables that the banks and lenders look at.
Right.
Versus just making the money, putting it into your account, so on and so forth.
To me, it's paying your, like if you were 1099
Yeah.
and someone is paying you and you're having to do your own taxes, first off, that's, there's payroll, there's just so many better ways to do it. And the sooner you can do that,
Yeah.
you're exactly what you said, the time in business.
You know what it is, Mike? I think it's also so overwhelming when a business owner is getting started. They're so focused on being successful,
Yeah.
making money,
Right.
being profitable,
Right.
But then there's all these other
That's what I'm saying. That's why we need to talk to guys like you and have them on.
things and avenues, and wait, I didn't know that, and I
Yeah.
should have did that before, and
Right.
so it's a process,
Yeah.
So I'm hoping to give some information that helps
Well, so
those,
far,
those
so good.
entrepreneurs,
So far, so good. Because those are the those are the fundamentals, because that gives you the ability to come back and say, hey, Frank, what are my options here? Because if I go there and I haven't done like some of the prep work, because for us, you want to know how the whole reason why I did some of these things is because I had to get it with a distributor. In order for me to get with a distributor, I had to charge people state sales tax because we resold stuff. And so we collected tax on the behalf of individuals. And then we would have to pay that back to the state of Florida. And also the Palm Beach, our county, right? And so some of these, in order to get with the distributor, they would give me a line of credit. In order to do that, I had to register with DMB. But it's some of these things that I accidentally kind of did back in 2018. And so when it came time around, it was like, hey, you know what? We really have got a nice product, and we're really ready to go to market with that, right? So like, how do I get in marketing? God, is just so expensive, right? And so it's how do I get to that point? And so that's where my buddy was, one thing led to another, and it's how we became, best of buddies, right? But we have an awesome relationship. So it's been nice to me because a lot of this stuff it's a full-time job, So tell me specifically more about like different things that you guys offer. Like, hey, okay, so I can work with a financial institution to get some sort of program.
Sure.
What do those look like?
Well, I mean, it all depends on the financial institution, right? If we're talking about banks,
Okay.
Banks are going to have stricter guidelines when it comes to underwriting. I mean, if you're a small business, a year in business, let's say,
Okay.
you're a year and a half into business, you're generating X amount of dollars. You go to Chase, Wells Fargo, some of these bigger banks, maybe they're not interested in providing a loan.
Right.
And
Chase is tougher.
And
Yeah.
then, whatever arbitrary bank you want to use,
yeah.
right? But ultimately what happened was this business came about, right after kind of the financial crisis. I mean, businesses have needed money to grow for many years, right? But this alternative lending space, really blossomed, and it provides smaller business opportunities where the guidelines are going to be maybe less restrictive
Okay.
for younger businesses.
Okay.
Maybe they don't care if you're 2 years' time in business. Maybe they don't care if you're doing $500,000, a year in revenue. And that's really,
Which sounds like a monster amount, but in reality, it's not.
I guess it depends on the industry too.
Yeah.
Some industries are going to have higher revenue than others.
Right.
But,
Right.
we specialize in a marketplace. We have the SBA lenders. We have the traditional term lenders. We have the working capital on the lines of credit, right? But just to kind of give you a little bit more information, there's usually 5 pieces of data
Okay.
that the banks and lenders are looking at.
Okay.
It's your time in business, your industry, your average monthly sales, your credit score, and your business credit profile.
Gotcha.
And depending on how strong or weak those data points are, determines the risk, which therefore determines the eligibility for certain products.
Gotcha. And, well, I mean, we went over a couple. So, like you had mentioned SBA, you had mentioned term, and you mentioned line of credit, right? So, which is let's just go into each one of those, right?
Yeah, sure.
So, what is the most common one?
I would say the most common would be,
If you were, what would you recommend?
everybody's different.
Okay.
I mean, every business has a different scenario.
Okay.
If you're looking for the purchase of commercial real estate,
Okay.
if you're looking for a huge growth project, right, that requires hundreds of thousands, millions of dollars, you obviously don't want to pay that back in a short amount of time, right?
Okay.
You're going to look for the option that gives you the longest runway, so to speak.
Okay.
Because the longer the term, the lower the payment.
Right.
So the SBA, they offer a 10-year term
So,
with their products.
real quick,
Sure.
just in case anybody's not, SBA is an acronym for.
Small Business Administration.
Gotcha.
The PPP guys.
Okay.
Yeah.
The PPP guys.
Yeah.
So small, and that's actually so Small Business Administration. That's a part of the government, or tell me how those work.
Yeah, essentially,
Okay.
but they're not a direct lender.
Okay.
So they have certified banks and lenders that they have, and they're the ones that actually do the underwriting and facilitate the capital under the guidelines of the SBA.
Okay. And so under the guidelines of the SBA, because that's actually it's a department in the federal government, right? Is that correct?
I believe it is. It's a branch.
Yeah. And they work with lenders like banks. So we're talking, So like there's, any of the big box banks or, and I'm sure you guys have a bunch of banks you guys work with.
We
correct?
do. And there's also opportunities for, maybe banks that aren't necessarily traditional corner banks that do offer SBA products. Matter of fact, there was just I believe it was in the beginning of the year that the SBA is considering now partnering with like fintech lenders.
Really?
Yeah.
Really?
In order to get SBA loans out.
And so what the SBA does is they act as a guarantor. Is that true?
Yeah, but you also have to put a personal guarantee.
Okay.
Yeah, usually correlated to those.
Okay,
products.
so you have a personal guarantee, and then you also have like they act as a guarantee for some of the amount. Is that correct?
Yeah, percentage.
Okay. And so there's different SBA programs. So you said typically it's if you're wanting to raise millions of dollars, so like or not millions, but hundreds of thousands of dollars for like commercial real estate, there's a program for that. And then there's just this, like, what if I don't need that much? What if I'm just an IT guy?
Yeah, 7A.
7A? Yeah. Okay. So 7A is a program, and then there's the real estate. It's a different program.
Right, 504.
Gotcha. So long story short, if you're listening and there's a bunch of different programs, there's a bunch of different offers.
Yeah.
One of the offers is going to be your SBA, which is, I guess this is supposed to be common. Hell, I had no idea until a couple of years into business, like what an SBA loan was.
Yeah, I don't think a lot of people really even knew about the SBA even until COVID hit, I mean.
Really?
Well,
did it kind of take off from?
Well, I think it gained more of a household name, let's say.
Okay.
With the introduction of the Paycheck Protection Program.
Yes.
Which helped, hundreds of thousands of businesses. I mean, we were cranking helping tens of thousands of businesses. We were doing the PPP loans.
Right.
Yeah.
Right. There's also doing now they have the ERC credits now.
Which I think they just put on pause.
Did they?
Yeah, for a little bit. They're working out some kinks, so to speak. We'll see.
Yeah.
We'll see.
So that's if you, those are like basically tax credits if you, if
W-2
you had,
employees.
Yeah, if you had W-2 employees during, COVID or whatnot. So, free money, or it was, or when I say free money, it's free tax credits, which is, there's not, a lot of times you see like those, I get a crap ton of these. Hey, you can get 200, it's the same guy, or it's like, I don't know, it's the same firm and they keep coming up under different names, but they keep offering me, $250,000, and it's probably an astronomical, rate or something like that. Weekly paybacks, almost like a buy here, pay here sort of a, title loan sort of a, I don't know. It's not something that, to me is credible. So, so speaking of which, we went down the SBA route, and then we talked about two other ones, right? So we have, let's talk about term.
Yeah, term loan. I mean, more of a traditional bank loan.
Okay.
2 to 5 years.
Okay.
Monthly payments usually.
Okay.
Typically they want to see a minimum of the credit score being at 650 and up.
Okay.
2 years of the tax returns, year-to-date profit and loss and balance sheet, bank statements. Process is obviously a little bit faster than the SBA. The SBA, typically the SBA is going to run you 3-4 weeks.
Okay.
Conservatively.
Okay.
Could it take a little longer? Yeah, it could. If maybe, usually after the initial underwriting with the SBA,
right,
they are going to ask you for additional documentations, as you and I both know,
right?
We've experienced that,
right?
But that also is going to determine the timeline in which you receive funding. The term loan historically has been a little bit of a faster process.
Are the rates better?
It depends on where you are in the rate cycle.
Okay.
A year and a half ago, 2 years ago, SBA loans were, 6.75.
That's what the prime plus,
right?
Yeah,
Wall Street Journal Prime Plus, right?
Yeah.
But now we're over 11% now with the SBA.
It's crazy. I mean, it's like that across the industry.
I know people pay attention to like inflation, the Fed's raising rates, but I think when they actually go and look and they are in need of a loan, I think they're a little sometimes taken back by where we are in the rate cycle,
right,
with the Fed,
right. I mean, it's
which correlates to how banks can lend and borrow money as well, the cost,
right? Because SBA, I know specifically, you look at it and it's they charge the Wall Street prime and then plus a percent. They're not allowed to charge more than the percentage, and it's based on how much money you're getting, right?
Yeah, wherever you go to get an SBA loan, the rate's going to be the same. They have to file that.
Yeah, that's what I'm saying. And so it's like this prime rate that kind of goes up, and it's based on inflation. It can go up and down, right?
Yes, correct.
Yeah, and it's based on inflation. I gotta believe it's going to get better soon.
Fingers crossed.
I mean,
Fingers crossed.
Expect the housing market. I had another Frank on. It's something about Frank and Frank and finance, right? So, are you Italian?
Half Italian, half
See, I knew
Irish.
it. Maybe it was the look. I kind of saw it too. My other buddy Frankie. He's a mortgage broker.
Okay.
Right. And episode 4, by the way, excellent episode. But he's talking about, hey, lending for, and he does something very similar, but he works with just in real estate, right?
Okay.
So, and we're all fighting this prime rate,
Right.
and hopefully it comes down. Hopefully it doesn't. And we're talking about like, hey, should I get a loan? At some point in time, if you're wanting to expand your business quickly, use other people's money, right? And so if I for me personally, if I wanted to raise money, I can either go through a traditional route for a bank, and then there's a cost there, right? Other option is I have to give up equity, and then if you give up equity, then you give up, some level of control sometimes, right? It depends on, who you partner with or what the equity percentage is. But once that's gone, that's gone.
Yeah.
Right. Versus like, hey, I can get a traditional loan or something like that. And maybe, I do eventually have to pay that back with an interest rate, but it is certainly appealing if I can just pay that back in a dollar amount and still keep all the equity in the company that, the company that I put hard work into, right? And then I don't have to answer to people, it's
Right.
like, because then that's a different sort of a conversation,
Completely different animal.
So terms basically just a traditional, more like, hey, it's a shorter term loan. Depends on the bank. The interest rate's going to depend on where you qualify at.
Exactly. Yeah.
You had mentioned profit and loss. Like, is this something that if, to me, I know what that is, but like, do you see people working with like a Xero or a QuickBooks or something like that?
Predominantly QuickBooks.
Right.
And if you're a small business owner, make sure you get QuickBooks.
QuickBooks.
It's so important. I don't work for QuickBooks.
Right.
But I'm just saying, for the purposes of ease, when you
Right.
get to a certain point in business,
Right.
find some sort of bookkeeping software.
Right.
You know, especially if you have huge plans and growth, and you're gonna need capital.
Right.
We provide templates
Right.
to clients.
Right.
So if you're in a situation where you don't maybe have a bookkeeping
That's
service,
a pain in the ass.
it can be complicated,
Well,
right? Nonetheless.
yeah. Well, if you've never done it, like
Right.
it's like one of those. You know what it is? It's one of those things that where you're working on the business where
Right.
you just don't know.
Again, going back to what originally we said,
Yeah.
you want to be successable, you want to make money, and you forget about all these little things until
You have to
you
learn
cross
it.
that bridge.
You have to learn it.
Yeah.
Because that comes into a bunch of different places. Because like, hey, depending on the type of entity I am, whenever I had originally established my business, and then I have business expenses because hey, it costs money in order to do business, right? So I get to be the ability to write off or categorize, different style of, hey, if I'm a gardener or something like that, gardening, a lawnmower, it depreciates all sorts of stuff, and it's like there's no reason to double pay for stuff.
Well,
right?
you know what? That's actually a great point that you brought up too, because going back to the underwriting, just because you think you have tax returns, business tax returns, your credit's over 650, it's not a green light just to shoo in, Another important variable is profitability.
Okay.
And it's kind of a scenario where if you're a small business owner, if your margins aren't huge to begin with, maybe like the restaurant industry or something along the lines of that,
Right.
you want to take advantage of itemized deductions,
Right.
Because you don't want to write a fat check to Uncle Sam at the end of the year.
Oh my
right?
gosh. No.
I mean, I know you don't. I
No,
definitely don't. Most of the people listening to this podcast don't, right?
My accountant hates me. I tell Salim all the time, we don't pay taxes here, bro. Yeah, I mean, we do, but like, that's why I pay you is like, we got to figure out a way to spend money so I don't have to pay them because it's one or the other, right? I can either invest in myself or I can invest in somewhere else, or I can give it to somebody and have them mismanage it.
Right.
So
the other side of the coin is that when a bank looks at your business and they see maybe you're not passing cash flow or DSCR, debt service coverage ratio, which is a formula used by banks which determines the profitability and affordability of a loan, essentially.
Okay.
And,
But when you say affordability, meaning the ability to pay it back?
Correct.
Gotcha. Okay.
So, that's another variable that goes into things. It's like, well, do I write a check to Uncle Sam at the end of the year and, show profits? Or, do I bite the bullet and, hope that I'm eligible for that product?
So, question, what if I'm not profitable? Is there still options for me?
There is.
Okay.
Yeah, for sure. One that I do particularly love, and I think we worked on this, was the Bolt, the SBA Bolt.
Yes, yeah. So SBA Bolt is.
I love it.
Yeah.
I love it.
Yeah. So they look at the revenue.
Yeah, and most people don't even know about this.
Right.
It's a new product by the SBA. It's called the Bolt, B-O-L-T. And historically, the SBA was heavily focused on profitability.
Right.
Minimum 650 credit score.
Right.
Profitability on the tax returns to some degree, right? With the combination of the financials.
Right.
And, you have it, if you're a young business, 2-3 years, and you're not showing a profit, well, the chances are, you're not going to pass that underwriting.
Yeah.
With the introduction of this Bolt program, which I love, they're not so heavily focused on profitability.
Gotcha.
They're focused on the gross revenue that the business is producing on an annual basis. And what they're doing is that they're saying, okay, we'll give you an SBA loan.
Right.
You don't necessarily have to be profitable like our traditional 7A, but we want to see your credit score at least 700.
Right.
So it's a little bit of a give and take.
Right.
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 But at the end of the day, you know, if you could maybe show less profits and have less tax consequences, we'll call them,
right.
but still get an SBA loan and, you know, going off the gross number, I think it's a win-win for both parties.
I know in our case, it was like, you know, for instance, it's like, so what does it mean to not be profitable? Like, how are you a business? So a lot of businesses are like that.
For
so
sure.
like, I know like, you know, it's basically life science. You know, if you're developing like some sort of medicine, you're never profitable. You're never profitable. You're just like a
Burning
loss.
cash.
Yeah.
Month over month over month
yeah,
over
yeah.
month.
And us, but they're developing a product that ultimately is a colossal sale.
They hope.
They hope.
If it gets through FDA.
I mean, you know, it's going to. We just gotta, you know, no. But long story short, they're developing a product. That's for us. It was the same sort of thing. Like, hey, we have software developers. We're developing a product, and so like it takes time to develop the product in order to have something to go to market, because you can't go to market, you know. And there's a fine balance there, you know. But just because, you know, and it really depends on, you know, how your books are, how you're writing stuff off. Like if you're counting stuff as a sale versus, you know. There are creative ways to raise money, and you know each business is different, right? Even if you're not showing a, you know, even if you're not showing a profit, right? So you can give yourself some time to get to a position to where you are profitable, and then take it to market. You know, so we'd also talked about a line of credit. So you know, what is a line of credit usually used for?
Covering inventory.
Okay.
You know, maybe one of your clients was late paying you. You have a little bit of an AR gap.
Oh my gosh, they're the worst.
You know,
they're the worst.
You see that a lot in industries.
You know what? You know what's just so damn mind blowing to me? Because like, you know, I discovered this. You know, basically, you know, traditionally speaking, whenever I was an employee, that you know, you go to work and people pay you. You know, open the business. You know, first couple, you do it and they pay you, and then somewhere along the line, you know, you run into this client and they don't pay you. And it's like, what just happened there?
Yeah.
Like, where you have to chase, you know, most times it's like, hey, they will. Sometimes sometimes, you know, there's bad actors out there, right?
Yeah.
So they will take it and you have to write stuff off as a loss, and that sucks, right? So not everything in, you know, accounts receivable is actually it can be counted as, you know, hey, that's cash in the bank, because it's not.
Right.
You know, there's actually, do you know there's entire companies out there that's built on giving people a line or a loan on their accounts receivable?
Yeah. Factoring.
That's crazy to me.
Yeah.
These finance companies, first and foremost, like a lot of times I see them, I'm like, how is that even a damn product? And then, you know, come to find out it is, because we work with a few that give out a loan at a percentage, and then they get a loan at a different percentage, and then they collect the delta in between, which is absurd to me. But, you know, it is what it is, right? To me, it's like you're making money out of nothing. But, you know, they're not, you know, but I just had no idea. So, yeah, the biggest thing, what we started doing was we do auto pay now. So it's because, like, I don't like chasing people. Like, that's uncomfortable. I don't have time to ask you to pay your bills, and B, I don't want to.
Yeah, but I also think it depends on the industry too, right? Maybe you might be able to do that in your industry, but certain industries aren't able to do that.
Well, we just tell them we're going to do it, you know, or we're not going to, you know, it's very much, we're not going to do business if, you know, and we haven't, I mean, I'm sure we will, but, you know, it's probably not a client that we want anyways, you know? So, and I get what you're saying. You know, you can't always do it, but like, especially like we don't do the credit card, we do ACHs. So
here, let me give you a perfect example. Okay. You're a construction company.
Okay.
You do commercial.
Okay.
Okay. You land a large client. You're building, you know, $10 million project. A lot of the times, those guys have to lay out money for material.
Right.
They have to lay out money for payroll,
Right.
uncertainties, subcontractors.
All right.
Now, if they don't have a large cash in the bank,
Right.
they're going to need that money in order to bridge until they receive their, payments, their payment schedule,
Oh,
throughout
that's what
that
the line of
process.
credit's for.
Exactly. Bridges that gap.
Gotcha. Which one's the most? So out of the three that we've talked about,
Yeah.
I know they're very different, right? SBA is a very long-term play.
For sure.
It terms in the middle.
Yeah.
And line of credit, I'm assuming, is short-term play.
Depends. Yeah.
Yeah. Okay.
Yeah.
Which is usually the best rate, best bang for your buck?
Historically speaking, the term and the SBA loans have been the lowest in cost.
Okay.
But, in the environment that we're in today, the Fed coming out raising rates, was it 18, 19 times or, whatever the number is. It's comparable now. The costs are kind of getting somewhat even.
Okay. Is the line of credit usually the more expensive one?
Well, it depends. I mean, a line of credit's not designed to be held for a long period of time.
Okay.
3, 4, 5 months max.
Okay.
And then paid off.
Okay.
It's more of a security blanket.
Okay.
Hey, if I need $100K, it's there. If I
Okay.
need it, if I don't need it, it doesn't cost me anything. There's usually no monthly fees, no annual fees.
Gotcha. Gotcha.
Could be the oh crap money, so to speak.
Gotcha.
you
Okay.
know?
Interesting. Because I see some of them and they're like super, like, is it 1 point, like I've seen like 2%, interest on it, 1.5, on
Annually?
for line of credit, or I think that's what they were, right? Is that not true?
I don't know. I haven't seen them that low. No.
Okay. All right. Well, you see, I'm
Yeah.
seeing stuff.
Yeah.
Maybe it's wishful thinking.
Yeah.
Yeah.
I would love to see that.
I mean,
If
me
you find
too.
someone that's given a line of credit for 1 to 2%, let me know.
Okay. Fair enough. Fair enough. What is it typically?
It's usually going to fall anywhere. On the low end, you'll see 14%,
Okay.
12% if you're lucky.
Gotcha.
Depends again, and it's all going to be based on risk.
Okay.
If you have a lower credit score, if you have a shorter time in business, if you're considered a risky business,
Okay.
it's going to change the underwriting.
Understood. How's the underwriting? So, which one's the quickest way to get cash?
Working capital.
Working capital.
Yeah.
So,
Unsecured, uncollateralized. So you're not putting up your house, your cars, your family pet in order to receive the funding.
yeah.
They're looking
they
at the
can-
bank statements.
I may pay somebody to take mine. No, I'm just playing.
Fastest process, 24, 48 hours.
Really? And we hadn't talked about that one, right?
Maybe.
Is that so? We talked about the three. When you say
I was thinking about when me and you were working together.
yeah.
In this conversation,
yeah,
no.
no. Okay, so this is actually a fourth product that.
Yeah.
So what?
Well,
what is-
there's even
what is-
more than that. I mean, we do
Really?
equipment financing, we do factoring. I mean, we really cover the gamut when it comes to business lending.
Wow, wow.
Yeah.
Oh, factoring meaning that what we were talking about, accounts
Yeah.
receivable.
Yeah. Big in the trucking industry, too,
Yellow just went out.
I heard.
Yeah, that was like just a
wild.
collapse. How's something that big collapse?
Happens all the time.
I don't know, man. That's to me, it's it's good because to me, you get a working, and I'm just a small time. Yeah, I'm a pup, right? In that, I'm no Yellow, right? But I guess that once you're growing to a certain extent, it takes upkeep to do it, and then something happens to kind of derail the train, so to speak.
Yeah, it's funny you bring that up. My dad's in the trucking industry.
Really?
Yeah.
Okay.
Yeah, like 30 years.
Wow.
Yeah.
Wow. Okay.
And they were predicting Yellow to like go bankrupt. I think it was like 13 years ago.
Really?
I remember.
They've been in
Yeah.
trouble for a long. I
Yeah.
guess they've been, because that's another thing. I was like, you see, like, how they not find somebody to give them like a little bit of cash or something like that to kind of make. I guess they've exhausted all those options.
It's wild.
They looked at the books. They crunched the numbers and they said, nope, too risky.
No dice.
Well, so contact you. How does one get in touch with you?
Go to Lendio.com.
Okay.
Read up about us.
Okay.
Do your due diligence. We're doing really good things. We're helping small businesses through those times of surviving and thriving. And I could give you my email, my phone number.
We'll drop those in the show notes. Yeah. So So,
be more than happy to help people. There's a lot of information out there,
right.
and it's hard to maybe strategize and understand the inner workings. And if anybody wants to reach out, be more than happy to give them more information.
And I'll just say, from a personal level, Frank, I can call him, about a bad day or whatever, and he'll have a conversation with me. But it's more of like, hey, we got to know each other. You got to understand my bit, and I guess you get to learn a lot about, these guys with their dreams.
I love it.
Or gals with their dreams.
I love it.
Yeah, I know, right?
I love it.
That's
I
why.
really
That's
do.
why I started the podcast.
I learned so much about so many different businesses
You're
and
like,
industries
wow, I had no
and the
idea.
inner workings.
Yeah.
It's like a plethora of information that's coming at you all the time. But that's my passion.
You're right.
Yeah, learning and helping and.
Me too, because because we do consulting for other businesses. So like a lot of times I'm like, we talk to somebody and it's like completely different than like, because we do like a lot of CRM deployments. So like I learned about different sort of underwriting things and like what is needed in regards to it. And it's like I remember when I bought my first house, coming up on 10 years ago. Underwriting was this big thing. I was like, oh my God, like I wanted to kill the paralegal, or not a paralegal, but whoever did the underwriting for that, right? Yeah. And now it's like whenever I was talking to you guys, I was like, oh, I've got accounting software, boom, 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 boom. It's very simple, I'm used to it, so to speak, right? So, it's been, it's a learning experience and having a good relationship with somebody who can,
guide you, provide you with the fundamentals and the transparency on what that process looks like.
Right.
Because some businesses need coaching.
Right.
And in that aspect, not coaching on how they run their business, but coaching on a lot of businesses come to me all the time. Right. I want an SBA loan. I want this. I want that.
Right.
No problem.
Right.
I want to help you get there.
Right.
But we're not there yet.
Right.
And I provide them with a roadmap, a game plan.
Right.
More of a consultative approach.
Okay.
Because I ultimately want to see them get the SBA, get the term, get whatever the product is that they're looking to desire. And I think a lot of times they're not getting that information or they don't know.
They don't know. I mean, they're, hey, I make cogs and widgets. That's all I know how to do, man.
It's like, well, how do I do that?
Yeah.
Where do I get this from?
Yeah.
What does it take to get there? Well, X, Y, and Z. If you follow it, 99% of the time we're going to get you there.
Right, right.
That's
key. That's clutch.
It's so clutch.
Yeah, because it's one of those things that you need in order for like a business to like succeed. It's like, hey, I Frank, this is what I do and this is where I want to go.
Yeah.
Help me get there.
Yeah. There's a lot, and then I think I don't know what it is. I feel like sometimes there's no secret sauce,
right,
so to speak.
Right.
People should just lay the cards out how they are. Be transparent, be candid with people on what it's going to take to get where they need to be. And if they follow that instruction and if they trust the process, I'm telling you, you'll get there.
Right.
I think some of the biggest hurdles with that is just not credit.
Right. Credit.
Yeah,
we didn't actually talk about that. So, like, is there, personal credit's a big thing on that. How does, real quickly, if someone's listening to this and being like, the only thing that they heard from the entire damn episode was, you have to have credit, and, what if their credit sucks? Like, what can they do right now? Or what is it? Well, you said 650 is the only number I heard.
But we're only talking about certain products when we talk about the 650, right? So the term loan, the SBA loan, that's usually a hard line in the sand.
Right.
Is there other products that exist out there? If you have a 500 credit score, yeah, absolutely. Working capital loans, cash advance, there's certain line of credit lenders, alternative products.
Right.
To help you kind of get started.
Right.
Create that commercial relationship, build the business credit, understand where you need to be in order to get to alternative products. But sometimes other businesses, they don't need the term or they don't need the SBA. Hey, I'm just looking to bridge inventory here for 30 days.
Gotcha. Yeah.
Can you get me some money? Can you help me out? And then, this thing's going to be paid off in 60 days.
Yeah.
No problem.
Yeah. So question on that. But it's usually, hey, if I don't need it, I only have 30 days or whatever. I only need, a little bit of cash for it. But like the reality is like, I don't want to say the reality is, but for most people, it's like, hey, the more capital I can have access to at any given point in time gives me the most options, and then I can pick the most advantageous, right?
For sure.
And so having the best score is going to get you there. How do you?
It's not going to hurt you.
Yeah.
It's not going to hurt you.
So what are, do you do any coaching in regards to that, or?
I do to some degree.
Right.
Now, I'm no expert in credit repair, full disclosure.
Yeah.
Right. But I have a good sense.
You're not bad at it.
I appreciate that.
Well,
Thanks.
Yeah, I mean, I'm sure you know your way around the block.
I know my way.
All right,
I know my way.
Okay.
All right. But there are little nuances and tricks and things that people can do in order to help. A lot of time, Mike, people come to me and we'll talk about credit and credit utilization, or people don't even realize that they have marks on their credit, and I highlight them, and they're like, wow, I didn't even know that was on there. That's from 7, 8 years ago.
Right.
And then they contact the credit bureau, they get it removed, their score bumps up, 30, 40 points, whatever the case is, and now we're talking about a different category of product, all from a 2-minute conversation and me just doing some data digging, so to speak.
Right.
And then a lot of businesses who maybe didn't pursue a business loan use credit cards,
right,
which is also a double-edged sword.
Right. I mean, those are probably because like everybody knows what a credit card is because it's very standard, but this is more along the lines of, hey, it's more advantageous, longer term, more capital usually, but and I'll get a little personal with it. So like, whenever we're going through it, Mike, Frank was like, hey buddy, you should, I don't know what's going on, but like, and you know what it was? My credit, I was like, what are you talking about, Frank? Like I don't have any credit card debt. And I went back and looked at it, and I had something that was like 60 days late, and it like really took my score down. And you know what? It was like a nothing bill. It was like $100, dude.
Yeah.
And like I had no freaking idea that it was there. And I was like, I was like, man, my credit's great, and because like I don't have any credit card debt. I pay my bills, but you know what it was? It was a bill that I just I thought it was on. I had like a $12.50, and it just like I had 2 late fees tacked onto it, and it was like $100. It was a nothing charge. A nothing charge, dude. And it was a 60, and it took my score. I raised my credit score like 75 points in a month.
From that little bit of information.
It was just like, but I just, because like I have everything that I need. Like I don't necessarily need credit. So like it's fine, man. I pay my bills, you know? And then, it's like, hey, try this. And I don't know if there's something, and you're being very polite about it, but I looked at it, I was like, this is, like I called the credit card guy, and they're like, yo, we're cool. We're going to take, like, because it was nothing. But, it's simple things that you can do to get aggressive to really, raise the score and put you into it. Because, like, in our case, like, we weren't desperate for cash. It was like, hey, Frank, I want to have a conversation with you to find the most advantageous path for us to get some sort of capital. Because, like, I don't need it tomorrow.
Right.
But I would love to have options.
Right.
So,
And that changed everything for us at that point.
Right.
And then we were golden.
Right.
And then we got funded.
Right.
Yeah.
Beautiful. So, hey, listen, man, this has been super insightful for me, and I'm hoping it's been super insightful for the viewers. But, we've talked a lot. Is there anything that we haven't covered that you feel that, would really, because you talk to the clients every single day where it's like, hey, I want to hit this. I want to hit this dream. I want to do this. I want to do that. You're the dream maker, right? So it's like, hey, what is something that we should talk about that we haven't talked about yet?
I think one important thing is knowing your cycle for cash flow. A lot of businesses, I think, don't prepare for when they actually need capital, and they wait until the last second.
Right.
And then they're scrambling.
Yeah.
If you're in a seasonal business, be prepared for that off-season downtime, right? Start planning while you're actually busy, while money's coming in, while you may look more attractive to a bank or a lender.
Right.
Don't wait for the oh crap moment and then you're hitting the button.
Yeah.
So I think if there's anything, when you're hot, you're running, business is great, everything's looking good, credit score looks good, I think that's a good time to maybe start exploring some options.
I
Because there's
agree wholeheartedly because, like I said, honestly, it's just options. So if and when you want to do other things, it's like now I have the ability, and my business is at a point to where we can take on new things,
Yeah.
and now I have the capital to help me realize that, right? And so hopefully, with that capital, I'm bringing on more and more business. So eventually it becomes like, the interest on it becomes an afterthought. Because honestly, if the interest rate, a 10% interest rate or whatever is keeping, then you're probably not going to stay in business. Because if your business isn't growing year on year
out.
10%, which is market average,
Right.
then you're dying.
Yeah.
And 20% of all small businesses shake out every year.
Oh, yeah.
So, thank you so much, bro.
Hey.
Thanks for coming on, man.
I feel like there's so much more, but maybe next time.
Well, hey, you know what? I can promise you, I definitely, this isn't going to be the last time we speak, So, we've been kicked around some different ideas to where we have like a small business summit or something like that, to where we can have like really, a finance, just basic, stuff that like maybe, that I didn't know,
Yeah.
That is very key and clutch information that every business should be doing. Whether you go with a, definitely prefer a Lendio, right? But, if you're going out, in another direction, that's not, but we just want to see your business do well.
For sure.
That being said, thank you so much
Thank you.
again. And thank you to our listeners. Remember, if you have not liked, subscribed, and shared, all the interactions very much appreciated. My name is Michael Riley, CEO of Amazing Tech. This is Amazing Entrepreneurs. This is episode 9 with my buddy Frank. We're going to have all his contact information in the show notes. You guys have an excellent week, and we will see you again next week. Thank you.